What's up, guys? William Ryan here from Optimal Advance. I hope you guys are having a great day. Sorry for not posting yesterday. I actually had to unload some storage on my laptop. I don't know if I mentioned this, but I have over like 25,000 screenshots on here, so I had to download some of them to my hard drive and then delete them off my computer so I could, do some more videos. So in today's video, I'm just going to be going over quickly the short position that I took on Bitcoin on the 4-hour. Okay, so the first video that I posted, if you go to about the 14-minute mark, I talk about this setup forming here, and I talk about how I'd prefer it just to fall out of bed from here and start attacking lows, but I mentioned that if we come back up into this fair value gap here, then I would be looking to go short, and that's what I did. And as you guys can see, price fell out of bed, and it's the position is doing pretty well. So first things first, I've actually taken some partials on this trade here. So I'll just put that one on there for now. I took another partial below here, but we'll just leave this on the screen for now. So basically why I took this setup, if you guys go to ICT's YouTube channel, in his 2022 model, this is essentially the basis for this trade. Oh. Okay, so the way I use this model is pretty identical to the way he explains it. I have some other things that I use that I won't be mentioning here, but we're just going to go off the ICT 2022 model. So first things first, right? We have a raid on liquidity, and if you guys go to Ethereum, when these highs were created here on Bitcoin, there's SMT divergence. Okay, so it's indication that we're accumulating orders above the high here to then go short, which obviously, as you guys can see, eventually ended up happening. So we have the rate on liquidity. We have number 2, which is the market structure shift. Okay, and the market structure shift is seen by the down close arrow here, right? So we took out the highs, created SMT divergence with Ethereum, and then we broke down. Okay, so this is indicating that institutional order flow is now bearish, and we could go into the marketplace hunting short positions. Right, so the next thing in the ICT 2022 model, right, is going to be the fair value gap. Right, fair value gap, order block. I like to use other PD arrays. I don't just use the fair value gap. I like to use other PD arrays as well. But just for this example, we have the fair value gap outlined. Okay, so when price came up into here, this is where I decided to go short. Okay, at the price that I went short was at 24,350, let's say. Okay, so I ended up going short here. As you guys can see, very little drawdown, basically no drawdown. We wicked up into fair value and then started to press lower, right, as soon as we hit this price level. Excuse me. So, right, the major thing we want to be looking for in this model is that fair value gap, but on the opposing end, we must have a clear draw on liquidity. Okay. So where would the clear draw on liquidity be? So we have these equal lows in here, right? This is liquidity that is stacked. Okay, so they're layering liquidity for smart money to take these orders below here. Retail thinks that this is support, right? And when we start to expand higher, they're in profit a little bit, but then the algorithm gives up the ghost and we proceed to press lower. Okay, we also have this sell side liquidity pool here in the form of equal lows, and this sell side liquidity here, okay, in the form of this swing low here. As you guys can see, I actually just took a partial off here because I personally think since price is consolidating, we could retrace back up into this fair value gap here, right? It's more defined on the daily chart, or we're going to start moving lower for the sell side here. And I'm okay with taking my partial here. Right, this is a swing trade, so I like the partial in and out. I like to get in and out of the swing that I'm anticipating to form. Right, and if you go back to a couple videos ago, I actually went short in here as well in this fair value gap, and I caught a little scalp in here. I didn't hold this position. I actually took those two orders off. I just took my partials and my take profits below the low that got swept. Obviously, I could have held the trade because we have this clear draw on liquidity, but for the most part, if I'm swinging a position and I'm scalping in and out, I'll just scalp in and out, close my positions, get my 2-to-1 or my 3-to-1 within the price leg that I'm expecting, and I'm totally okay with that. I'm a scalper and a day trader at heart, so me getting in and out of the marketplace is more ideal than me holding long-term positions. Okay, and if we were to go down into the hourly chart, which I'm going to go down into right now, you guys can clearly see, right, my entry here. Okay, what are these two down close candles? Right, this is a bearish breaker. Okay, so if we wanted to refine some PD arrays and an area of price action, right, let's say you didn't want to use the fair value gap. You could have used this bearish breaker in here to go short, and that would have been totally okay. But as we can see, no matter what PD array you guys use, it's all personal preference, right? Like the 2022 model is not in stone, right? You can use breakers, you can use order blocks, you can use really whatever you want, whatever suits your personality the best. So don't think that that model is just strictly for the fair value gap, right? Yeah, as you guys can see, look at this price action here. What kind of price action is this? It's lethargic, it's slow. Okay, it's indicating that we are accumulating orders in here, right? So I'm going to take the breaker off. I'm just going to get some of this stuff out of the way. Right, so remember how I mentioned how price will go from high resistance liquidity run to low resistance liquidity run in my previous videos. If you haven't checked those out, guys, I highly recommend you check them out. They're very informative, very educational, and there's lots of value in there for the community. Right, so you have price, right, consolidating, and we start moving higher. Even still, look at the movement higher, right? Does this price action look like this here? Like these big down close candles and these down close candles here? No. Right? So the bias is bearish, right? We had the SMT on the highs, we broke down, and now we're indicating that we're consolidating, like accumulating and manipulating here. Right? We have the 4-hour fair value gap, this 1-hour breaker in here, short it. Okay, and then look, we get immediate reaction. Look at this candle right here. This is what ICT always calls when like the elephant jumps in the pool. Okay, so when you enter a position and you start seeing candles like this, you know you're going to be on the right side for the most part, okay? Right, same thing in here, okay? So we have consolidation, a small manipulation higher into this refined hourly fair value gap. Notice how the bodies are respecting this refined hourly fair value gap. Okay, the box is the 4-hour fair value gap. The hourly is the refined fair value gap. See the bodies respecting that? That's beautiful, right? Price starts to expand lower. Okay, we break this low, right? Which is always a good sign. We come back up one more time, probably back up into equilibrium, right? Back up into a discount, or sorry, a premium, sorry. And then we start moving lower again, right? We start getting those candles that are indicating that we are on the right side. Okay, whenever you enter a position and you're looking for price to go in your direction, you want to see it do so with speed and magnitude. Okay, we don't want to be seeing price action be lethargic in any way, shape, or form. Right, that's going to indicate that we're in a high resistance liquidity run and we may potentially be offside. Okay, when you enter a position, these are the candles that you want to see. Okay, this brings us to our current price in Bitcoin, and what I am potentially anticipating is I think we're going to continue to move lower. I see these equal lows down here as a draw on liquidity. Right, and as you guys can see, we are stacking equal lows again. Price came down. We did not take out this low. We'll check just to make sure. 20,701. 20,740. Yeah, so this didn't take out this low here. So we primed equal lows again. We could spike up into this breaker here on the daily. Just get rid of all this stuff. We don't need it anymore. So you see this down close candle before the up move, right? See how price was acting as support in here, right? Price came down 1, 2, 3, and then we started to move higher for the high here, and then fill in another portion of this gap, right? So we want to see this bearish breaker hold price. Okay, so if we're gonna drive up in here potentially for some form of manipulation, we want to see this down close candle hold price, right? And then start to move lower for these equal lows here. If we do end up coming down to these equal lows, this is just a clear objective that I am mapping out. They're very, very clean, but ultimately, if we go below here, I think we're going to attack the sell side liquidity resting below this low as well. Okay, guys, so this is what I'm anticipating. I hope you guys found this video insightful. Please like, comment, subscribe if you guys found any value in this video. And again, make sure to leave some comments in the comment section on where I can improve and what you guys want to see moving forward on this channel. So thanks again. William Ryan from Optimal Advance. Take care, and we will see you in the next video. Cheers.